taking a look at the S&P 500 as we get ready to trade January week 3. Yeah, we are already at monthly OPEX because the options world actually counted that week going into New Year's Eve as January week 1, even though we never traded January 1st on Friday or had any options that expired that day. They still counted that as January week 1 for the options across the markets for everything. So we've got monthly OPEX already in our lap this week, even though it only feels like we're in the second week of trading for January. Here's ES, 5-minute view of ES. You can see that ES, we came up here into this all-time high and closing high on Friday. And as you can see, we've gapped down to open and we're kind of rolling over a bit here on futures. I'm going to show you in a minute the S&P 500 chart. I'm thinking that maybe the halfway back of Friday's range, that is S&P 3805. It's probably about 3798 on ES. So if we are going to continue lower and break 3800, maybe it's just going to be a little look below it and reverse. That's what I would be looking for tonight. And maybe there's a pretty good dip to buy between 3800 and this 3792.75 where the Friday overnight high was on futures going into Friday's session. So here is our S&P 500 roadmap. As I said before, we rallied up into a new all-time high and closed at a new all-time closing high on Friday. 38.24 is that all-time closing high. The halfway back of Friday's range, 38.05, maybe futures are kind of headed at the equivalent of that, and maybe there'll be a good reversal here. You can see that the halfway back of Friday's range holds us above Thursday's close. We had a bit of a sell-off that happened out of nowhere intraday on Friday on some news that this center-right Democrat senator from West Virginia, Joe Manchin, was a headline hit the wires that he was against the $2,000 stimulus checks, and that just sent the market down. But then later he walked back those comments, and the comments actually said, I will consider all proposals in front of me. I'm not just going to go ahead and vote for that without even looking at something first, basically is what he was trying to say. And so we rallied back up to a new high on the day, resolved the overnight high that we had with ES coming into the session, which had been an all-time high that we did not quite print in the morning on the S&P, blasted through that, made a new all-time high and closed up at it. So this halfway back point would be our level to hold going into Monday's session with S&P. And if that breaks, obviously, we would come back here and maybe test Friday's low. Friday's low, 37.83, was right in line with Wednesday's high, Wednesday's rally high. And it's about a little bit more than halfway back into the range of Thursday. So we've got a really good symmetrical thing going on here. And we also have the 80 handle roll playing out before our eyes. So if we break this 38.05 and 3800 doesn't hold, we naturally expect to fall back to the 3780s. And that should hold us, and we should reverse off of that. And if we don't, then we're going to fall back to the 3760s. We're going to test Thursday's low. We've got the 10-day simple moving average moving up very quickly here. I would say that's the deepest we would pull back, would be to come down here and reverse above Thursday's low, hold open this gap, and hold above the 10-day simple moving average. Because as soon as we start breaking the 10-day simple moving average, we start getting into sort of a corrective mode, where we break through that and we challenge the 20-day, and then maybe we're going to be coming all the way back here and testing the January low that we set in the first day. I don't really think the market is up for that. The volume that we're seeing in the options right now points a lot more to maybe a little test of 3800, but then a move closer to 3900 before the week is out, according to what the volume looks like in the options, which I'll go over in a minute. If we were going to head a little higher, plus 2% on the year gets us to 38.31, and plus 2.5% gets us to 38.50. When we look at our other S&P daily chart, this one that I put the measured move targets on, we fulfilled the one that I had for December. We wound up fulfilling that on the first trading day of January. Knocked that out, so I have a new one for you that I introduced this week. If you hadn't read the notes or seen the previous videos or whatever, we're going to take this December range and double it up or double it down. It looks like we're already well on our way to the doubling up phase based on the moves that we made on Wednesday, Thursday, and Friday of this week. That would take us up to 38.87. So times 2 up the December range. If we were to fail and fall back down here and start breaking the 10 and the 20 day and we made a new January low, chances are we would test the December low here and then fall into a doubling down of that December range. And that would take us through the 50 day and all the way down here to test the 100 day and to test the bottom of this fork that we trade in. And speaking of this fork, we have two closes above the median line in a row here from Thursday and Friday. So very bullish. You can see that back here earlier in December, we had some nice closes going on and a nice movement holding above the median line. And then we fell back on this sell-off on the 9th, and we never really could get back above the median line until this week. And we put in two closes above it, Thursday and Friday. Also note that our 200-day simple moving average has really taken a turn and is really accelerating higher as well. That just rose above the 2019 close on the final trading day of 2020. So now we are, we got positive for the year for a day, and then with that 200-day simple moving average, and then we're into the following year now, and it's still climbing. It's really took this turn here and is accelerating higher. So that looks pretty bullish. So we were going to take a look real quick here at the options volume. Wait, that's the wrong one. Darn it. That is the spreads. I'm going to just look at the singles. Okay. So looking at the January expiration monthly options, there's quite a bit of volume here at the 3,800 puts. So this could just be short put sellers that are, that when we had that nice dip down to 37.83. I mean, all the way down to 37.83. These guys could have been shorting these puts. Or maybe this was, just a lot of day trading of them that created this volume. But this is where the volume was on Friday. It was very heavy here. And then you see some volume coming up here at 37.50 and then all the way down to 3,700. There's really no excuse to be any lower than a 3,700 on puts now. Because you can certainly afford these. If you can't pay $5 for an S&P 500 option, S&P is not your vehicle then. You should trade SPY instead, or you should be trading spreads. You can buy a long spread. Over on the call side, there's some pretty good volume here at 38.50. Let's hope that that's just not call sellers that took advantage of that end of the day rush and wound up shorting some of these, or maybe it's just some profit takers because there's a lot of open interest. But there's also a lot of open interest and quite a bit of volume that came out here on Friday in the 3,900 strike. So maybe this is telling us that our move towards that 38.87 measured move target might not even be, wide enough of a range. Maybe we're going to even try and make it all the way to 3,900 this week to put on a show for monthly OPEX, because then we get into the following week and we have the inauguration and everything that we start trading towards. And I think maybe some money is going to want to come off the table. Nothing big yet, but just to see what happens in case there's some sort of like domestic terrorist event or something that happens surrounding that, as we saw on the 6th. Here is the Friday end of day. For me, by Tuesday afternoon, I will stop using these January monthly OPEX ones and be moving to these Friday end of the day. But you can see there's quite a bit of volume standing out here at, once again, at 3,800, 3,750, 3,735, and then on the calls, once again here, 3,850, 3,880, and 3,900, and then even some moves all the way up here, 3,925. So we'll see. Sometimes these are just bought as, bases that they plan to short against as we move up. So don't always rely on the idea that we're going to make it all the way to 3,925 just because there was a week in advance. There was a lot of volume there. It could just be, a setup where people are buying this as their base. And if we never make it past, 3,900, they'll just short against this 3,925 that they have as a long. Okay, before I make this video go on longer than I wanted it to, I'm going to just leave it there. Hope this video helped you out and gave you an idea of where we're at. We really want to keep an eye on that 38.05 level after we open tomorrow, and we're going to be looking to take out Friday's high and continue on to 38.31 and 38.50 and 38.87. Have a great rest of your Sunday. As always, good luck and good trading.